Hey, what's up everybody? It is Tuesday, August 25th. Market up again. NASDAQ, new record high. Dow was off a little bit because they said they were going to take 3 stocks out of the Dow. It was ExxonMobil, Pfizer, and one other, which I forget right now. So the Dow was down a little bit, but it made back most of its losses. Look, I don't see this market correcting really in any meaningful way. The flows are just too strong. They're enormous. They keep going up every day. I mean, we are almost 1.7 trillion in spending over where we were at the same time last year. And last year was a record. Last year at this time, we were up 277 billion. And you could probably go back and watch my videos around this time last year, and I was saying it's unprecedented, it's gigantic, so it is massive. I mean, there is nothing really to compare it to, and as long as that is the case, the market's going to keep going up. Now, I could envision a scenario where we get a correction when everybody is finally in. And I've been talking about the AAII weekly survey, and individual investors have been bearish and negative for the last 6 months. I mean, there has not been a single week where they have not been negative. So when that flips around, and it should, we should start to see that soon, I think. I mean, at some point, they're just going to throw in the towel and they're going to jump in. And then I could see, a technical correction. Or perhaps something comes out of the blue that we're not expecting, some news, some event that could cause the market to correct. But even under those circumstances, with this level of fiscal support, see, that's the key thing. If the fiscal support remains the way it is, like any correction, any pullback, you got to buy it. I mean, this is just massive amounts of, this is true money printing. This is not, the Fed, they're printing money with all those wackos. Every time the Fed does something, they're going nuts. When, in fact, monetary operations that's not money printing. Those are asset swaps. I mean, this is the real deal. So with this kind of fiscal support, now don't get me wrong, this is not going out equally to the economy. I mean, some sectors are benefiting mightily, and there's still a lot of people hurting. But overall, in the aggregate, as we like to say as economists, I mean, this is just a tsunami. I've used this term before, just lifting everything up. And the markets are really being pulled by these mega cap stocks, and they're the main beneficiaries of all this spending. So that's the way it is. And, I could envision also this thing running all the way until the election, and if Trump doesn't get reelected, then it's quite possible that the market sees that as a negative event and there'd be a lot of emotional selling. But even under those circumstances, the spending is not going to go away. And you know how government is. I mean, once they raise the level of spending, it's very hard for them to cut it back. So this might be the new normal. So really what we have to talk about is the possibility of higher inflation. Now, I think I said in a prior video that inflation pressures will be mitigated by Fed policy if they keep rates at 0. Remember, rate adjustments equal price adjustments. When they keep rates at 0, that keeps inflation very low because the cost of credit is reflected in the cost of all goods and services. So while there might be a lot of spending and a lot of money out there, and maybe the economy is not running at full capacity, so you have shortages and that's starting to push prices up, the fact that the Fed is keeping rates at 0, that is, offsetting some of these inflationary pressures. And the Fed said it's going to stay at 0 for an extended period of time. So we may see some inflation, and I think that's probably the reason why we see the metals, gold and silver, gold at a new record high, pulled back a little bit, but it's a pause. Silver had an amazing run so far this year. And we see other commodity prices like lumber, oil, up in the mid 40s, might pop a little bit higher. We saw it today, the API oil inventories another draw in crude, and a big draw in gasoline, down 6.4 million barrels. And this hurricane down there in the Gulf, they're starting to shut down refineries. So we could see a short-term spike in gasoline prices. So that's where it's at. No fiscal cliff. The fiscal support is enormous. Those flows are gigantic. It's just going to keep lifting up the markets. It can get like extremely overextended. And I don't see any prospect for a pullback, at least until everybody goes all in. And we'll know that when we look at those weekly surveys. They come out every Wednesday evening, and I usually send it out in my report early Thursday morning to my subscribers. So if you want to get that, go to my website, pitbulleconomics.com, sign up for a 30-day free trial of MMT Trader. And while you're there, remember, I have all my courses. I have the 25-hour Forex video course. I have Understanding the Daily Treasury Statement. Many of you have purchased that. That is the best 99 bucks you will ever spend in your life. If you know that resource, that is an amazing resource. If you know how to read it, if you know how to parse through it, if you know how to manipulate the data in there, I mean, you will be way ahead of any Wall Street economist. Way, way ahead, believe me, and ahead of any forecaster. And of course, MMT Value Stock Selection course. You can get all three as a bundle. I have it all in there. All right, that's it for today, everybody. Market's going up. See you tomorrow. Bye-bye.